Is it too late to jump into Palantir, or is smart money just buying? Palantir is currently trading at a 614 times earnings. The normal company in the S&P is trading at just like a 27-28 times their earnings. We can say Palantir is relatively more expensive than the average S&P company. Alright, for new investors that does not have a sizable amount in Palantir, they want to see the PE ratio drop before they even take a look at this stock. So for Palantir's PE ratio to drop from 614 times earnings to around 45, their earnings per share would need to rise to around $3.14 per share from its current 0.23, assuming that the stock price stays at $141 right now. Alright, Palantir will need to generate around 7.2 billion in net income to achieve a 45 PE, right, at the current price of around $141 and the share count of around 2.3 billion shares. To justify for its current valuation, earnings per share need to increase because it is the denominator for the calculation of PE ratio. So when earnings per share increase, the PE ratio will decrease. Their average revenue for their top 20 customers grew from 55.5 million in revenue to around 69.9 million, which is around a 26% growth average in the last trailing 12 months. And their net dollar retention is at around 124%, meaning of money that they keep earning from their coexisting customers, right? What this basically says about Palantir is that the customers love their services and hence the repeat of purchases of services. One of the important aspects of the recent news of Palantir is their partnership with Bain, one of the top 3 consulting firms in the world, right? McKinsey, Bain, and BCG, right? So how this benefits Palantir as a whole is Palantir's marketing focuses too much on tech-heavy marketing, and investors which may not be so well versed in the space of technology fail to realize the whole potential of what Palantir could be, right? They are unable to grasp the potential of the technology that Palantir is giving. So Bain comes in, facilitates this technology between Palantir and companies, and this is why I think their partnership going forward would exponentially boost Palantir's revenue, customers. Right, I've stated this in previous videos, but Palantir's ontology is unmatched. Right, its future, in the future, it's gonna be like an electricity, a core essential item that we use in our daily lives, right? A system, a cog in a system that runs so efficiently that it ultimately becomes irreplaceable for businesses, and soon all businesses will need to embed this technology within their systems and structures. The faster the adoption rate, the faster that these businesses gain new data, they train new data, and eventually gain market share from the ones that are not using this type of technology. Right? They are great at creating vertical ontologies, adopting new AI. All in all, Palantir's stock is currently overvalued, but I'm not going to contest the fact that it's overvalued, right? It is overvalued, but considering every dip, I'm going to be there scooping more shares of Palantir.